Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, May the 8th. The year's 2023. Let's talk trading, not your trade with Walmal. These videos are for educational purposes only. Your results may differ from mine. You know, there's that bad joke, nacho trade, talking about nachos. So one of the things that you have to, as a trader, you have to realize when you see price move, but you didn't get a signal based on your method, your how you enter trades, that wasn't your trade. That's not your trade. And it's real easy to get caught up in these movements on a price movement on the screen, say, oh, I need to get in and jump in on that. Well, if it's not your trade and it works out, that's the first time, then it's going to reinforce a bad habit, and sooner or later you're going to get bit.
Yeah, you're exactly right with that, sir. And I think the thing is, sometimes I think we're just we're being Debbie Downers or whatever, and we're sometimes it feels like we're scolding the traders out there, and I think that everybody needs to hear this, and that is that what, we all do it. I do it, Hero, you do it. I've seen you do it, and you've seen me do it. It's just it's part of human nature, and unfortunately, it's something that you just gotta do your best not to get into the habit of doing, and and just not developing a course of action there. And it's sort of like you see a big move, and it's sort of like, oh man, I got to get on that wave and ride that wave into the beach, and there'll be a pot of gold on the other side, right? But that's just not what we do, or not what we should do for a long term. And I'll do it, from time to time, and sometimes I'll be successful, and sometimes I'm not. But the problem is when you do that, is that, at least for me, and I think also for you, TRO, as well, correct me if I'm wrong, is that what happens is that well, there's a number of things. The first thing is, if we're truly going to be technical traders, and we're truly going to be statistical traders, we're relying on one thing and one thing alone, and that's what the statistics show. If we're expecting, a 5% edge, or a 3% edge, or a 2% edge, whatever it may be, we got to go and rely on that. We can't go and rely on something that's a completely unknown variable. Now, if you want to go and take that, that jumping on the momentum type of thing, or jumping on the movement type of thing, well, go out there and do the research and see if it works out. And if it does, rely on those statistics. If it doesn't, well, then you know better not to do it. Unless you just like to gamble, because that's what it is at that point. It's gambling. And what we're doing is we're taking risk, we're assessing risk, and we're placing a trade, and we don't know whether or not it's going to be good or it's going to be bad. But what we do know is that over time, in the long run, we will be on top, as long as we go and follow the statistics, and march down the road following those statistics. When we just go and say, hey, there is, look at that, jump in it. Well, sometimes you're going to be right, sometimes you're going to be wrong. And if you haven't tested it and you haven't gone back and looked at it, spent the time, you don't know what you're getting into. It's just it's like, it's sort of like, if you remember back when you're a little kid, and the teacher would go and do at Christmas time, would do a grab bag for a present. Every kid in the room would go and bring in some type of gift that was like $1. I'm dating myself, $1 or less. Right now it's probably $30 less. Who knows? But and you just stick your hand in the bag, and you pull it, a present out of the bag that's wrapped up, and you pull it out. You have no idea what it is. And statistically, you don't even know what it is. Well, that's what just jumping on a trade is. You just sticking your hand in there. Whereas, they've refined those type of things, like in the classroom, where now, okay, all the boys put their presents in here, all the girls put your presents in there. So at least you got a better chance at least getting it. If you're a boy, getting a present that, matches you a little bit better maybe.
That you just dated yourself because they don't. I don't think they even do boys and girls anymore. You got your non-binaries and all the. You got your 72 genders or whatever it's up to nowadays. But anyway, back to trading. What's really funny is how you can take something simple like our flip-flop boxes, which is just, you look at the two candles. If they're different candle colors, then we basically say, price flipped or it flopped. Um, and then what happens is um, you set up some other things. So, like, we like to use the indicator two dots. But as you can just see now in the 1 minute, it came out of that flip-flop box hard. It didn't have any, you would be going against the indicator two dots. But the reason why I bring that up is that these methods, when you go back and you run statistics, none of them come out to be 100%, which means that if you take a trade, some of the time it's not going to go your way, and it just might actually hit your stop loss. So, you don't want to
You're
take
exactly right
trades.
on that.
Yeah, you don't want to take trades that aren't your trades. And then sometimes you do take trades that are your trades and they just don't work out. But that's just the statistics. And so what you don't want to do is start to make a bunch of changes to your entries based on the most recent loss. And that's what people are so out there. Some of the traders, they'll do that.
Right. It's, I think a good way of looking at it is if I get a coin and I flip a coin in the air, okay, I got a 50% chance it's going to be heads and a 50% chance it's going to be tails. Now I could flip it 3 times in a row, 4 times in a row, and get 4 heads in a row. On that fifth flip of the coin, what are my chances of getting a heads again? 50%. Because that's probability, and that's how probability works. Now, at the same time, if I was to go and look at all of my flips across, let's say 30 or 40 times, the individual flip, I don't know which way it's going to go. But I know over the 30 or 40 times, I should be pretty close to 50-50, unless I have some type of, snaked coin that's got, it's weighted in some way or whatever, but, that's the way statistics work. And I think traders, what they don't get sometimes, and I'm guilty of this as well, is that, I can go and take 2, 3, 4 losses in a row. That's part of trading, because that's the way statistics work. Because we remember the 2, 3, 4 times that we lose in a row, but we don't remember winning 10 times in a row. It just we just put that out of mind. We just remember the bad part. And the problem is when we go into that, let's say we win 5 times in a row. Well, there's a good chance, that we're going to go and take some losses. But the reality is, the next trade still, whatever the statistics say they are. If I got a 55% chance of winning, I still only have a 55% chance of winning. And the problem is, when we take a loss, and then we take another loss, we don't remember all the other wins we had, and the next thing you know, what we do is we throw another coin in the bucket, and we'll throw another coin in here. So instead of flipping one coin, we're flipping 2 coins. And you know what? The statistics are no longer the statistics, because we have a variable in there that has now messed everything up. And if you want to go do that, that's fine. But, the reality is, don't rely on the statistics that are already there. You need to go and refine your statistics to take into consideration your new variable that you've entered into the equation. And that's when, and what happens is that what people do is they start with a baseline, and a flip-flop box. Next thing you know, they've added this line and that line, and they've added this, MACD and a stochastic of some sort.
Rank, and
And
don't forget Renko charts.
Renko charts, whatever, and we just keep on adding things on top of things on top of things. And what we have done is we've walked away from what the base statistics were. Now, I've got nothing wrong. You want to go and do trading that's having all those things in it, fine, do that. But now what you got to do is you got to go back to the drawing board, and you have to go and statistically map out what's actually happening. Because let's say originally with flip flop option, your chance of winning was 55%. Okay, here's a reality with all those other things that you just added in. Okay, I guarantee you it's no longer 55%. It may be better, it may be worse, but it's not 55. I can promise you that. And so you need to go and do that research and figure that out.
Yeah, and it's, and the more levels of complexity you add on, it just makes it that much more difficult.
You're exactly right. When you add these levels of complexity, all of us at the core are very simple people. Okay, that's who we are, and our brain is an incredible instrument, and it can do some incredible things, and very, very fast paced. But one of the things that we are not very good at is trying to go and do multiple things simultaneously.
And in fact, it's impossible because our minds are single-threaded processors.
Exactly. And so what happens is that we now go and we back in the days of time sharing computers, back in the 1970s when it first came out. So it's sort of like you just go from task to task to task to task. And the difference is we're not computers, and what happens is sometimes we'll miss the task in the middle of all those other tasks that now throws the whole method into the trash bucket.
Right. Right. So, because what I did was I switched over to my the previous 10 high and lows chart just because we've been stuck in a range between about 50 and 55 here now. And you can see how right now prices in these blue lines, which you can think of them as, okay, this is an area you want to buy. And then when it gets up above the red lines, that's an area where you'd want to say exit your buy and maybe reverse and start to sell again. And so, it's going to, as you like to say, it's going to work till it doesn't. But it's like, how
Right.
many wins do you pick up in between? And once again, like if you were using a 10 pip stop loss, um, worst case, if you bought at the high and sold at the low, you'd be stuck in the trade, but you still wouldn't have hit your stop loss. So, you could still be in the game. And in this case, you could, flip it, buy low, and sell high, and you could work your way right out of that trade. But right now, it's pretty obvious that price is stuck in
Right.
this
Price is
area.
stuff.
And in the last 5 minutes, it's stuck between 49 and 53.
Yeah, we're just for whatever reason, Now I do know that today, if I recall correctly, I haven't looked at it in a little bit, but there's no news today of any significance anyway to really drive the market in any particular direction, which means that it's probably going to be stuck in this, and maybe eventually it'll probably put in a higher high or a higher low. Don't know what that would be, but that's just the reality of what the market's doing today. And I just looked it up. There's no real news today, and I don't think there's any news tomorrow either. So it's just one of those things where sometimes it's the way it is. We don't have any real big mover news until all the way until Wednesday.
Yeah, we've only got a
So
44 pip range, so price is pretty muted.
exactly, and that's what price tends to do. Okay, you know that. Okay, well, if you know that that's what it's going to do, maybe what you can do is take advantage of that too. Because advantage number one, don't trade it if you're looking to go in on one trade make 50 pips.
Right.
Don't trade it. There's an advantage. You're not taking the chance of taking a loss, right?
Yeah, and you know what, Walmal?
We're out of time, bro.
Yeah, fastest 15 minutes in trading is almost over. So, fellow traders, once again, sit down, look in the mirror, and just remember what your trade is. And so when you come back to your trading platform and you see this price movement, but it doesn't fit your criteria, you just wait because it's not your trade. And remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.